What's good, everyone? Welcome back. Today I'm going to be focusing on the model that helped me pass a phase 1 and phase 2 of another funded account in just 1 week. The second phase was actually done in a single day. I just caught that one trade that let me run. I was up like 2k, and then I held the last trade like up to the 5% that I needed. The model focuses on the power of 3. And this is specifically going to be focusing on the pair XAU-USD, which is the gold pair, and Asia session. This doesn't mean that you specifically have to trade Asia session. This is just where the beginning of the power of 3 expansion begins. So for those of you who don't know what the power of 3 expansion is, let's go on a higher time frame. So let's go 4 hour just so you guys can actually visualize this candle right here to the right. What this candle is well, it's just an indicator, but what this candle is the daily time frame candle, right? This is how the daily candle looks of this specific day that I'm in, right? So see, we're now on the daily chart. There's the wick, there's the body, and there's the top wick. So going back to the lower time frame, you can see that inside of this range we have like what actually makes up the candle, and that is this open right here. We have the wick, which is the high that came above the open. We have the body, or the down like bearish wick right here, and then we have this bullish move right here, which created the close, right? It pushed up and closed right here inside of the new day opening gap, and that new day opening gap is also a daily confluence. That's not directly like correlated with this model. That's just the confluence that was respected today, in addition to this IFG right here, right? We had first it was a bullish fair value gap, right? But price disrespected it. It closed below right here when it gapped open, but price decided to run up above it anyways. And what this becomes once it runs back above and respects it is it turns first from an IFG after it closed, but then it disrespected the IFG, right? And now it's respecting that bullish one again. So this is known as a Reaper FVG. That's something ICT teaches, just basically a bullish fair value gap being used as a bullish fair value gap again, in simple terms. And that's why we were bullish for today in our Discord. We were aiming for buy side from the midpoint. We had 2 moves that ran from the midpoint, so going on the lower time frame, you can see that the initial move happened, today is Wednesday. The initial move happened at around 8 a.m., right? So the 10 a.m. was actually the bearish move to the midpoint, also sweeping these lows. We were expecting some buy side like earlier. We didn't get the move, so we were expecting buy side later in the session. And that model, like even though we traded the New York session, it still correlates with the power of 3 model. The idea of where the daily candle is going. And we had the accumulation, right, starting from Asia range. We started accumulating liquidity. New York session runs up and sweeps that liquidity, creating the wick, right? If normally this would happen inside of Asia session, then we would look for the power of 3 or daily expansion inside of Asia session. Today, however, New York created the daily expansion when we ran on the Asia session high, creating this wick. And then we expanded towards the sell side. So we swept both the highs right here of Asia session and the lows right here from London session and late Asia session, right? Midnight open price right around 12 o'clock right here. So we did run up on buy side and sell side here. And the last trade that we took was right here in this 30-minute fair value gap, where I said we are expecting it to expand higher and use it to go close in the new day opening gap. And I mentioned this in our Discord. We're expecting price to create an IFG from this daily bullish Reaper, right, which is the daily fair value gap that we're in, and we're looking for this 30-minute to become an IFG. And that's exactly what happened here, right? We ran up, this became a bullish Reaper, and this 30-minute fair value gap became an IFG once it closed above, and price continued to run higher. Now, to dive into this model, the power of 3 model, right? What does power of 3 mean? PO3, you might have seen this a lot. It means that there are 3 different parts of this model, right? There's the accumulation, there's second the manipulation, and the third is distribution. And distribution is known as the move towards the actual bias. Manipulation is known as the move on liquidity, and accumulation is known as consolidation. So you already have right here kind of like the bulk of what this model is. You want to find this first accumulation, right? Price is creating a range. You want to see the manipulation, which would be running on both sides of liquidity that was accumulated. And lastly, the distribution, which actually runs towards where the daily candle wants to close. And a lot of the time, I see this happen inside of Asia range, right? Inside of Asia, where we create this daily range. So if you have the TradingView replay, you can go back in time and just kind of look at the daily candle developing. The reason why I say this model is focusing on Asia session, especially in the pair XAU USD, is because it's a safe haven asset and it moves even during Asia session, because the JPY and yen are based on the gold. Like, it's all correlated with gold. So in this day right here, even though we opened and didn't actually sweep the open, so the wick wasn't like significant in this day, there are various factors that you have to consider. And this day was an IFVG, right? We have a bearish fair value gap, which was traded above, closed above, and as soon as Asia session started, we started seeing that move back into this IFVG, but price did not want to run lower. It didn't want to even close inside of it. And you can see that the reason why we might have not gotten a wick is because it already did what it needed to do. It got the liquidity from this IFVG, and then it began to run higher, right? So that is a example that Asia session creates these large moves, and you can get the daily expansion before New York session even starts. And when that happens, typically New York won't create a significant move. Like, it's not going to do something so significant that it's worth trading when you already caught the move from Asia session, right? Another example right here. So you can see that we had the open, and as soon as it opened, price already created the wick, right? So if we're anticipating sell side here, let's go back to this range. Look, this is the previous day, and when Asia session or New York closes, the new day opens. See how there's nothing to this candle, right? This is why we focus on Asia session, because this is when the new day opens. The new daily candle on the daily chart begins moving. And what you do is you wait for it to develop. Once it develops, it makes the wick. That's when you begin to look for that sweep of liquidity. You look for that IFEG, and then you look for the expansion of the daily candle, right? And your model might be different from mine. I look for a little bit of a, in this case we did start just trading around the new day opening gap, right? You can see that we ran to the midpoint, body stayed under it, and then we ran from it. So that was the confluence, right? Everyone's confluence is gonna be different. There was also this fair value gap right here. Everything just kind of aligned for the sell side. But the model is the idea that the daily candle wants to close in a specific location. And in this case, that specific location might have been this daily range right here, this daily fair value gap, right? On the daily, what do we have? We have a fair value gap right there. So that day, it wanted to run to that fair value gap. And what I want you to do personally, because I'm not going to teach you what model I trade, I'm just going to show you the idea of what power of 3 is, because it's not limited to a specific model. It allows you to be flexible and create your own model to trade the expansion of the daily range. And that's why New York is still such a popular session, because it still has most of the time a red folder news, and it corrects the move that happened. So if there was a range like this and we're approaching New York, let's go so you guys can see the lower time frame. If you can see a red folder news on a day where New York session is and there was already a move like this, what news typically does is it will run on like the accumulation, right? The consolidated price, and it will disrupt where the daily range already created. Like, it will disrupt where it went, and you'll have another opportunity inside of New York session to trade where the daily range wanted to go. And in some situations, it might have, right, moved down from Asia range, London, into New York, and then New York news ran back up. And what happens is that the daily range still wants to close bearish. So even though it runs up inside of New York session, you can just trade it from New York back to where it wanted to go initially, as long as that's where you think the daily range wanted to target. if that's where it wanted to close. In situations where Asia and London simply ran to a daily fair value gap and New York, like the objective was already hit of running into this fair value gap, then New York might have been bullish and you might have just gotten a move up. You can see right here in this day right here that, well, it is a Monday, so it makes sense, but Asia range and London had this move. And because the move already happened and expanded, New York didn't really do anything, right? On days with no news, if the daily range has not yet expanded, then you might have a trade. On days with no news and the daily range has already expanded, you can consider yourself free from the charts that day, because you should not be trading New York session when the daily expansion already happened and there's no news to correct to this range. You will have no trading opportunity. It will consolidate just like this. You'll think, oh, because this is a bullish fair value gap, we're likely to get some buy side, and you'll get chopped up inside of this range. So you have to understand that the 3 sessions, they kind of work together inside of this daily range for the objective to accumulate, manipulate on those accumulated liquidity, and to distribute towards the actual bias. And that distribution does not have to happen in New York. It can happen in Asia, it can happen in London, right? Look, we have a move from Asia session, creating fair value gaps. Then the London session pulled back up and ran from the fair value gaps and this new day opening gap. That's the idea of Power 3. I hope you can incorporate this into your model. Focus on this pair that I showed you. Join my Discord. Send me a message. Show me your trades. Show me if you're doing it correctly, and I can give you some advice. This is the Power of 3. Thanks for watching.